Welcome to our crypto podcast on YouTube, where we dive into the ever-evolving space we call cryptocurrency and blockchain technology. Whether you're a seasoned investor or new to the game, our podcast is built for everyone, guys. Our goal is to provide you with engaging and informative content to keep you up to date. Sit back and relax and enjoy your cup of coffee while we get into the markets. First things first, guys, is I just want to dive into some technical analysis, looking at the Bitcoin on a weekly chart. I don't think it's helpful from our time frames and how long we're investing. We're not trading Bitcoin, so it doesn't really make sense to look at it on like a daily chart. Our thought process and the time frames that we're trading in, it makes sense to look at it more in like a weekly, daily, or weekly and monthly chart. So Bitcoin, what are we sitting at right now, Don?
23, I think, is where we're right in the general neighborhood of.
23.
28.3.
Okay. So we're at 28 right now, and this is good because the moving averages are starting to curl up and show an uptrend. That's what we want to see. For the last year, we've just been on a downtrend, and it's just so evident because the moving averages are just pointing down. It's just a simple visual confirmation I like to use, but it looks like we're starting to curl back up. So again, it doesn't matter. I'm still DCAing every month, every week, every year. To build that average out. So 28.3 on Bitcoin. Let's pull up the Ethereum chart. Ethereum, we're sitting at 1854. Same thing. We're starting to have that curl on that moving average, which is good, showing you that the long-term trend is showing a potential reversal. Just some simple TA. And it looks like we might test the highs from in August right here, which was about 2000. So we do have a pretty strong resistance, which is expected around this 2000 level, and it sits at a whole number. So it's a psychological thing. You know, if prices top out at like a 2000, 3000, that's a pretty strong resistance. And you got to imagine all the short sellers. So there's people on the other side of the trade that are shorting Bitcoin, shorting Ethereum. And where do you think they have their stop losses? Well, they probably have their stop losses above 2000. So this, and what I like to see is not only do we hit it once, but we're getting close to a second. So the more times we test this support or this resistance, the stronger that resistance becomes. So, you know, if we hit it one more time, maybe we sell off again. And that third time, fourth time, that could lead to some nice momentum breakout. Again, you got to think of other people on the other side of the trade and where they have their stops placed. Total market cap, and we're up a little bit from last week. Last week, we're sitting at 1805. Total market cap is at 1 trillion, 1.15 roughly trillion. Same thing. We have that strong resistance at 1.5. So once we break out of this zone, we've been in this range for about a year now. So, you know, we're at the higher end of the range, which people can look at it. Oh, this is a time to sell because you want to buy at support, sell at resistance. First out of the news, we're going to be talking about Russia. Russia becomes the second most powerful Bitcoin miner in the world. So obviously they're taking advantage of this technology. So it's time for the U.S. to double down on ensuring Bitcoin mining thrives and grows in the U.S. or the exact countries the U.S. has sanctioned will control a large portion of the global hash rate.
With everything going on in the macro environment with Russia teaming up with China and kind of like going after the dollar and recruiting a lot of other countries to do the same, it really is troubling to see that, you know, places like Russia and even China are much more Bitcoin friendly than we are here. Like they seem to have a universal understanding of the technological advancement that Bitcoin poses for, you know, monetary value, and they seem to get it, and we don't. And, you know, we talk a lot of shit about Russia and we talk a lot of shit about China, and they just seem to get something that we can't get here. And it's embarrassing, man. Like we're supposed to be, you know, we're pro America, we're pro, like, you know, America first, and why wouldn't we be doing something that is great for our country? I mean, I get it, you know, we want to save the dollar, you know. I think there's a world where both can exist. I think, you know, as much as we think and believe that the dollar will be supplanted at some point. But up until that happens, I think there's a world where both can still exist. You know what I mean? And there's even a world, crazy enough as it might say, there's even a world where the Bitcoin could actually be what backs the dollar. I mean, it's possible. It's a possible scenario, but it's just so unlikely because of how like people like Elizabeth Warren and a lot of others just have no idea about how Bitcoin works, or spread a lot of misinformation about the environmental concerns, which are all just completely whack. I mean, it's just we fight against ourselves about this, and we should really be leading the forefront, and we're not. And places like Russia and China are just getting ahead of us, and it's going to be great for them long term and not good for us.
Yeah, this should be a wake-up call for US to realize like these countries, and at first they were banning it, right? They ban it, and then now they're embracing it, embracing the technology and leveraging it and using it to, it's like the space race. We had the space race, who can get to the moon the fastest. This is similar to that. This is like an emerging technology that's, if not bigger than, why don't we just embrace this technology and utilize it and start building and keeping jobs and building and keeping the innovation in the US? Because what's happening is these companies are going overseas, and it's just going to make the US weaker. Not only is our reserve currency weaker, like our stance in this thing is just getting weakened.
The broader problem too is that we have these very smart, innovative minds in the space that have been around for a while or really get it. And they would be our biggest assets in like moving forward in the United States with Bitcoin. And they're just getting tired, and they're moving to the other countries that are more Bitcoin friendly. So we're losing these people. So when and if we actually do wake up, like a lot of these people that would be there to help advance us are going to be gone.
Awesome. Some more news on the week. Coinbase CEO Brian Armstrong confirms plans to integrate Bitcoin Lightning Network into the platform. Well, that's good news. And a little late, right?
He gets a lot of shitting on from the Bitcoin maxis, only because Coinbase was one of the first exchanges in the United States, and they listed a whole bunch of what they would call the shit coins, Shiba Inus of the world, and in the crap coins and the shit coins and the pot coins and all those coins that a lot of Bitcoiners were just like, what are they doing over there? But I mean, to be fair, Brian Armstrong's been around for a long time. Like he brought the ability for people to buy Bitcoin in the United States really first. So I think he gets it. I mean, I think, it's kind of like the same philosophy that I have. Like, we live in a world that's not Bitcoin only. Like you can be Bitcoin only in your ideology. And I get that. And I understand that. And I respect that. But in the world that we live in right now, like, I can't go to Tops and Wegmans and buy my bread and my meat and my food in Bitcoin. I still need dollars. Like, they're going to convert to dollars. So the dollars are still what I need to get my basic needs met. So he's a capitalist, as am I. And, he's making money off these other coins to probably still stack, more Bitcoin for himself, like much of us do. So this is good. I mean, it's a net positive. The Lightning Network is great. And and believe it or not, like, the Lightning Network is still like got so much more to scale. I think it's only something like 5,000 Bitcoin total have been transacted across the Lightning Network, like something less than that, because most of the transactions, like, you can send somebody 100 sats and like that. Like, I can send you right now and you got it. You know what I mean? Like, it's literally lightning quick, as the name suggests. So, you can send and transact. Like, people get caught up in, Bitcoin is slow, the blocks are slow, it costs money to send Bitcoin. It's like, well, the Lightning Network exists for us to send just like that. Like, you could send somebody $20, $30, $40, $50, $1,000 quick, and for basically nothing. You know what I mean? Like, the fact that Western Union and MoneyGram exist, you don't even need to use that if you want to transact on the Lightning Network. You know what I mean? And the Lightning Network has been really heavily utilized in places like Nigeria, places where people are basically working for like $100, $200 for like a week or whatever they're making, like small amount of money, and they're sending it back to their family. And like Western Union like crushes them for like 10%. So every $100 you make, you gotta give up 10% of that. Whereas if you send $100 on the Lightning Network, they basically keep 99.99% of the money that they earned. Yeah, this makes sense.
Yeah. Yeah, and another thing I wanted to point out is, and I don't know if you have any information on this, is I've been watching Binance USD, BUSD, so it's the stable coin for the largest crypto exchange, Binance. And I've been watching the inflows and outflows of the stable coin. And as you can see, if you look at the market cap, this has just been getting destroyed, like the market cap. And then if you look at, let's look at USD, look at the market cap going down, right? From going up, and then look at Tether. Tether's just going up. Is something about to happen? I feel like this something with the stable coin. I know we just seen something with Tether, but I have a intuition feeling like something's not right. And then look at the market cap for Tether is just about to break an all-time high. So people are obviously whether they're either Tether's printing a bunch of money or money's flowing out of BUSD and USDC into a more of a decentralized stable coin. Any thoughts on that? That's a little weird.
I've never felt really great about the fact that we can't really audit Tether to really know what they really have. It's always been a mystery. In the 2017 bull run, there was a lot of people that just felt that the reason why we had that bull run was because of Tether just printing a lot of coins and people using it to buy Bitcoin. And obviously we saw that, that got like irrelevant by this last bull run where it didn't matter. It happened anyways. But the fact that Tether does not have like anybody able to audit them or see their books or see if the money that's supposed to be backing Tether even exists, it's alarming. But again, Tether could collapse and could fail, and it would probably have a minor effect on the markets. But overall, I mean, one Bitcoin is one Bitcoin. Mm-hmm. You know what I mean? You don't know if one Tether is one Tether, right? But you know that one Bitcoin is one Bitcoin, regardless if it's worth 69,000, 28,000, or 13 cents back in 2009.
And that gives me peace of mind because if Tether did fail, money would just be flowing into the hard assets, ultrasound assets, Bitcoin and Ethereum, which would be good for the BTC and ETH holders.
Yeah.
Moving on, U.S. personal savings rate year to year from 1960 at 10.1. So for every $100 you save, or every $100 you make, you save about 10%, which is pretty good. But it's just like every year over year, it's just, you can see the massive decline all the way to 3.7%. So savings rate have plummeted to 3.7, their lowest since 2007, which is right before the financial crisis. By comparison, the savings rate in 2008 was 4.6, and in 2009 it was 5.9. So even during the financial crisis was higher than what it is today.
So I sent you this because there's a deeper dive that we really should take in this that I don't know if everybody's seeing that I want to point out.
Yeah, let's hear it.
So if you take a look, I want you to look at 1970, right? Look at where it's at, 12.8%, right? Mm-hmm. What was going on right around 1970? Because the next year they took us off the gold standard.
Yeah.
We were printing money out of control to the point where in 1971 we had to let everybody see who the man behind the curtain was, and the jig was up. We're like, yeah, we're not pegged to gold anymore. So we were printing money uncontrollably, right? So you look and you see that. Then you look and you see go down to 2005 and you see we're at 2.9, and then you look at 2010 and you see 6.2. And at that time, we had done the TARP plan, which was like 789 billion, and we printed like another 2 trillion behind the scenes, and we were like, oh my god, that's just so much money, it's ungodly. So we basically 2x'd from 2005 to 2010 of what people had because we flooded more money into the economy at the time, what we thought was a lot of money. But I mean, in retrospect, after what we've seen the last couple of years, it really wasn't that much money. And then take a look at 2020. Now, I've been hammering this home for the entirety of our podcast. The reason why we're in this problem and the reason why Bitcoin will succeed is because in 2020, the money printers just went burr and they didn't stop. From 2020 to 2021, we were just giving out money like drunken sailors on a boat. You know what I mean? Like we got $1,200, we got $1,400. If you were on unemployment, you got $600 on top of whatever your regular unemployment was. So if you lived in the state of New York, you got your $500 that the state of New York gave you, plus the $600 that the federal government gave you, plus the $1,400 stimulus, plus the $1,200 stimulus. just money was just flowing. Our assets were rising, and you could go on Robinhood and be like the god trader on everything. So we go up to 16.8% because it wasn't savings. You were just given money, right? So people saved money that they were given. They weren't saving. Now we look at 2022 and, the party's over. They turned off the printers, and 2022, we saw all assets basically collapse. You saw the stocks collapse. You saw real estate come down. You saw interest rates go up. Bitcoin, crypto, everything started collapsing. And oh my God, people are only saving 3.7% of their money now. The printers will come back on. That's the gist of it. The printers will come back on because we don't save money. We don't know how to save. We're financially illiterate in this country. The only way we can actually save, and I'm using quotation marks, is when they give you more money and they turn the printers on. We suck at saving. This is why Bitcoin is here, to help us, to save us, to make us financially literate. And it's crazy because those of us that engage in crypto and Bitcoin, the vast majority of us understand money and we're financially literate, right? The people that are financially illiterate that don't understand money are the skeptical Bitcoin people. For the most part. I mean, and the ones that aren't are your Peter Schiffs, who are financially literate, but they're in gold and silver, which again, I don't bash that. It's better than the dollar. Mm-hmm. It's second best. You know what I mean? According to Michael Saylor, there is no second best, but if you want to give them a consolation prize and a ribbon, like that's your second best. Yeah. Can't hate that. But the financially literate people, we don't save. Yeah. There is no saving. Without the printers, there's no saving.
Come on, guys, start saving. Get that percentage up. Let's get 5%. What's 2023 going to be? 5%? I don't know. I'm not a big, but I don't save. I invest. Yeah, that was a really good point. I like that. Definitely making a short.
But you can't save. But you can't invest if you don't save.
Yeah,
it has to come from somewhere.
Right.
So you say that you don't save, but you do because you allocate funds to
immediately. So it goes from boom to boom.
But that's residual income that you have that you don't have to spend on other things. Mm-hmm. People that can't save are so extended in other things, like they're paying off their credit card bills, they're going out, shopping, or they're taking trips that they really can't afford. They're doing things with their money that they shouldn't be doing, that they don't have the money, their funds to allocate. Mm-hmm. So you say that you don't save, but you have the residual income to invest. The people that can't save, they can't invest. They're not investing.
I seen something that there's people, let's say you make $10,000. Like if you can't manage $10,000 and save and invest it correctly based on that small amount, you won't be able to survive. Like you can get handed $1 million and it'll be gone just as fast as you got it. Cause like you got to really have a plan. What I like to do is like, before I get my active income, cause everyone works, works for active income. I'm already thinking of what I'm investing in before it gets in my pocket, as opposed to thinking about what vacation you're going to go on or what you're going to spend your money on before you get it, which hence a credit card. People spend money they don't have. I and financial literate investors think about what they're going to put their money in investing wise before they actually get that 9 to 5.
Well, here's free game for people. And I'm always talking about this, and people, it's hard for them to conceptualize. The number one rule of money, when you get your paycheck, 90% of the population or maybe more pays their bills. Mm-hmm. The first thing you need to do when you get your money is pay the person that earned it, which is yourself. Whether that's investments, whether that's putting money in the bank, you need to pay yourself first before you pay your bills. Because if you flip that on its head, and this is why it works, if you pay yourself first, you'll hustle to pay them bills because you want to keep the lights on, you want to stay in your apartment or your mortgage, and you want to make sure all your bills are paid. But if you do it the other way and say, you know what, I'm going to pay all my bills first, and whatever's left over, I'll save.
Yes.
You can say, you know what, next month I'll save. You know what, next month I'll save. Or, oh, I like that purse. If the females, oh, I'm going to go buy those pair of Jordans. And then you never save because you say, oh, I feel at least my bills are paid, right?
Right.
And that's a broke philosophy. Yeah. And that's what 90% of our population has. And that's why the really ungodly number is like something like 40 to 50% of people making over 6 figures are living paycheck to paycheck.
Yeah.
Imagine making $150,000 a year living paycheck to paycheck.
Well, I live paycheck to paycheck, but how I do it is like what you just said. Like I will get money. Let's say I get like the first of the month, I'll get it. I will invest everything to the point where I'm getting down to the end of the month where my rent's going to come out on the first.
But I would disagree you're not paycheck to paycheck. because you have assets you can liquidate if you got into trouble.
Right.
When you're paycheck to paycheck, if the paycheck stop coming, you're fucked.
True.
There's
When
nothing to liquidate.
Right. So like I'll be like, okay, all I have in my account is like barely just enough to pay my bills. And I'm like hustling. I'm like doing extra. Like I'm closing more deals. I'm doing more shopping orders. Like I'm doing more things to make that money. Cause it's like, frick, my rent's gonna come out and my $1,100 rent's gonna come out in 3 days, and I only have $500 in my bank account. I gotta work extra hard to make that money. Even though in the back of my mind, I'm like, okay, if I really get down in trouble, I can just liquidate this, which I don't want to, but I really stretch myself thin to the point where it's like I have to work hard, and it
hustler
pushes
mindset.
Me. Yeah,
yeah, it's a hustler mindset.
Yeah,
you're doing it right, bro. That's how you got to do it. Yeah.
Awesome. On to the next news. 1 million Bitcoin, 1 million addresses. So 1 million crypto wallets hold at least one Bitcoin, a new all-time high. So what's that? There's 21 million Bitcoins ever to be created. Yep. If you want to be part of the 21 million club, you have to hold one Bitcoin. Don is part of the 21 million club, but he's not a part of the 10 Ethereum club.
No,
I just
made
that up. I just made that up. I was looking at your Instagram and I was scrolling down to the bottom and you were like posting in like 2014, like Bitcoin charts, and it was at like 1,000.
Dude,
like,
I got the receipts, buddy. I've been here. I've been here. I've been grinding.
I'm pretty sure there's one screenshot. It was like $400 Bitcoin. I'm like, what?
Yeah.
Damn. That's credibility right there. You definitely been in longer than I have. But the thing about crypto is like 2 years in crypto is like 10 years in traditional finance. So it's like, even if you've been around for one cycle and you've survived, you've seen so much and you've tolerated and built such a tolerance to this industry that it's a lot faster than or longer than being in TradFi, you know.
Yeah.
I learned more from the 2020 bull market in crypto. I've learned more from that than I did in a 4-year degree in finance. You know,
I'd agree. Absolutely. It's a good thing to see that, you know, so many people have at least one Bitcoin or more, and that's going up. Even when you have people like Michael Saylor with, you know, as many as he has, 140 something thousand Bitcoin just with MicroStrategy, and I think he's got like between 10 and 20,000 personally himself as well, like on the side. But you know, there's only 21 million, man. So there's only so many people that can get a hold of one Bitcoin. And I've shared the stat before. There's something like, I think at this point now it's like 52 to 55 million millionaires in the entire world. So if we ever flipped to a Bitcoin standard, which is the goal, every single one of those millionaires could never own one Bitcoin. There will be millionaires on the outside looking in to the Bitcoin standard.
That's crazy.
Yeah.
That's why it's such a threat.
Yeah.
You can't.
That's why they're holding on so tight, man. They know that. They know the numbers. These people aren't stupid. They know.
Awesome. Moving on. Let's talk a little bit about China and Taiwan. French president wants Europe to reduce its dependency on the US and become an autonomous third superpower.
Macron from France spent quite a bit of time over in China the last couple of days. And even while he was there, you could see that they're ramping up their military arsenal around Taiwan. I don't know the exact number, so I don't want to say exactly what it was, but there was a certain amount of like warships in planes and stuff like that, basically encircling the island of Taiwan. And there were a lot of people tweeting about it, saying it really looks like they're about to go in, and they're like, wow, what if they go in while, you know, the French president is there? And that didn't happen because he's already come back. But I mean, there's a lot of things going on where it's just like these countries are feeling very brazen, like they're doing things that they just never did before. And, you know, people might say, oh, it's because Trump's not there. Oh, because Biden's there. And again, it's way deeper than just politics, man. They've attacked our dollar. Our dollar's weak. Our economy is weak. And that's when you strike.
Yeah.
And that's been going on for decades. That's not one. You can't blame that on one person. You can't blame that on one administration. We've been doing this to ourselves for decades. So this is, you know, at some point, you always have to pay for your mistakes. You can't keep making mistakes over and over again and not have to pay the piper at some point. In the United States, it's time to start paying the piper, unfortunately.
Like you like to say, the baby boomers been kicking the can down, and I mean,
Yeah.
even before them, like they've been kicking the can down the road for quite some time now.
It's crazy. And again, this I don't want, like I said, I've said it before. I don't like to get political and all those kind of things, but like I think it's a safe thing to say that like it's very tough right now to be a masculine male. You know what I mean? Like the old school philosophy of masculinity is kind of being attacked in our current time. I think we can both agree on that.
Mhm.
Like
Oh, absolutely.
the acceptable ways of a male to conduct oneself in 2023, not the same as it was in
83.
1993 or maybe even 2003 or even 2013. Like we're definitely not in 1950 or 1960 when the times in this country were really really good. But I think men are being silenced because we're afraid to be canceled. I mean, if that's even a real thing or not. I mean, who knows? It's debatable, but you definitely will be, shamed and embarrassed for acting in certain ways, and not everybody, is comfortable feeling that way. So, if men are being attacked, masculine men, who's going to stand up and defend us? Because we're being attacked. I put a tweet out last week that I believe, and I don't say this for clicks, and I'm not doing this to get engagement farming. I truly 100% believe this. World War III has already started. I think we're being attacked electronically, digitally, and I think the dollar being attacked by China and Russia coordinated together and getting these other countries to sign off, that's an act of war. And I think that the war is underway. And I think, we're so used to boots on the ground, and we're so used to, seeing tanks and cities getting blown up, and I think that the whole Russia and Ukraine thing is kind of almost like smoke and mirrors. I'm not saying that that's not a real conflict and there's not real things being fought for over there, but I'm saying like us, United States, we are under attack, but we don't respect it because everybody's going on as business as usual, and we're not really fighting a war where we're losing soldiers, so we don't really like respect the fact that we're being attacked. Like we are under attack. Our dollar is under attack. If we lose world reserve currency, that will have damning economic ramifications for every single American, whether you bleed red, blue, purple, you like Biden, you like Trump, you like nobody, you don't vote, you do vote, you're gay, you're not gay, you're whatever the hell you are. Like it will affect every single red-blooded American if our dollar loses world reserve currency. And I've said this before, even as a Bitcoiner, the goal is for Bitcoin to be the standard. But losing the world reserve currency of the dollar today or now in the near future is not what we want.
Whether you bleed rainbows, it's not what we
Yes.
want.
Yes.
Yeah, that's a really good point. And that's the thing. We need to come together, but it's really hard to come together in today's day and age. Like it's a psychological warfare. It's psychological virus. They're weakening, they're soft, they're making men weak.
I'm shamed at my job when I have a salad and a pre-prepared meal sitting in the lunchroom. Like I'm getting, oh, look at Don. Oh, he's eating healthy. Like it's
He's
like
healthy. Yeah.
yeah, and
Crazy.
I got the guy next to me with a bag of Burger King, and the other guy on the other side a bag of McDonald's, and this guy's eating a pizza, right?
Yeah.
And I just had to go through 3 years of being told what healthy means by getting a jab in my arm or wearing a mask on my face. And these same people were the ones that were telling me it, and they eat like shit. They don't exercise. They look awful, and they work in healthcare. It's like, what fucking planet are we on, man? Like, what's going on? I don't understand. And these are the people I'm trying to educate, and they just want to put their money in these or put their money in nothing. They go buy shoes and they go buy purses and they just waste everything. And I try to have a conversation with them about what's going on, and they don't want to hear it. But they want to shame me on my salad that I'm actually taking care of my body. I actually care about being healthy. It's wild, man.
We should turn this maybe we don't do a crypto podcast anymore. Maybe we talk about critical thinking podcast.
Well, I mean, it's funny you say that, but to be a successful investor, you have to be a critical thinker, and you have to remove some emotions away from things and just be blunt about things, right?
Yeah. You
You
have
can't, when you put the emotions in, it fucks everything up.
yeah. You
You
have to
gotta
be
be,
realistic, logical, thinking for yourself. My best investments are ones where I did my own due diligence, where I went in and I found theses, narratives, and I use those, and I'm early to these narratives. And then when you're early to narratives, just because you're early doesn't necessarily mean it's going to be a win.
I want to ask a question to people. This is really what we're really how I want to end it. I mean, I want to ask people what your plan is. Okay. If everything goes to shit like we believe it's going to, I believe it's going to, I feel like it is, but you may not feel like it is. You may think it's a possibility. Okay. So I think at this point we can all agree that it's a possibility. What's your contingency plan if everything collapses, right? In a world where everything collapses and all the traditional investments, like, if you're a real estate investor or you're into stocks or you're into bonds or any of these little things that you like to dabble in, your Robinhood account or your TD Ameritrade account, and they all get smashed in this environment where everything collapses, right? Where do you go? What is your contingency plan? Is it gold? Is it silver? That's not terrible. But let me ask you a question. In a world where everything collapses and you're just holding gold and silver, how do you transact? Let's say you have bars of gold and you need something from somebody. Are you going to chop up that bar of gold? Are you going to chop up that gram of silver? What if what you need isn't that whole bar? Now you have a big problem. What do you do? How do you transact? Right? Dividing up gold is difficult. It's been a great monetary advancement, engagement of finance for millennium, right? 5,000 years. But it doesn't serve the purpose anymore. If that's your plan, it's not a good one. And what we're trying to help you with, and I don't want to use the word sell because we're not selling you anything, but the idea that we're trying to sell you is to take a look at something like Bitcoin. We talked about it earlier. There's only 21 million of them. But the great thing about the 21 million is that you can break them down to Satoshis, 100 million Satoshis. If you hold Bitcoin in the environment that we think is going to happen and you need to transact, you can transact 8 decimal points all the way down to 1 Satoshi. So if you need something from somebody, they can say, I need 1,200 Satoshis from you, and you can send it to them if you have 1 Bitcoin. If you have 1 gram of gold, you can't do that. Or if you have 1 ounce of gold, you can't do that. So the reason why I said last week, it's egregious if you don't have at least 1 or 2%, and Troy said 5 or 10, which I definitely agree with, or more, of your portfolio in something like Bitcoin, you are doing yourself and your family a disservice in that environment that none of us hopes happens. Even though I strongly believe it's going to happen, I still hope it doesn't, that everything collapses, because there's nothing else that's been created that can help you in that environment besides Bitcoin. Don't trust, verify.
Don't trust, verify, guys. Give us a like, subscribe, and we're going to be bringing this content. Follow us on Instagram, follow us on TikTok, follow us on Twitter. We take videos, short form reels through the longer form content, and we post them throughout the week. Just to give you guys some of that extra. If you don't want to sit here and if you don't have the attention span to sit through a 40-minute podcast, that's fine. I don't expect you to, with all the seed oils and processed foods you're injecting in your body. I'm just kidding.
Best thing they can do, man, is just hit the like button, hit the subscribe button. That's the best
get us
way.
in that algorithm.
Free.
Get us in that algorithm. If you guys find us valuable. If you don't find us valuable, then you probably haven't made it this far to even hear the closing statements. Yeah. So you must like it a little bit. Like, subscribe, follow us on Instagram, Don Rinaldi, Troy Poley, and don't trust, verify. Thank you, guys.